In today's video, I am going to explain to you how you can actually live off your dividends faster and earlier than expected. So there's 3 strategies I'm going to give you. Number 1 is to try and find ETFs and stocks that pay monthly. That way you can have kind of a steady income coming in. And then second is to find dividend stocks that will actually give you an increase in dividends multiple times per year, or at least once per year, and a sizable increase at that. And then the third strategy is to find high dividend stocks or ETFs. So the first strategy is to find, or at least the first strategy I'm going to talk about is to find stocks that increase their dividend regularly and of course higher than inflation. For example, TD Bank, they have currently a 3.8% dividend, and if you look over the past 10 years, they increase their dividend over 10 years 2.4 times higher over that 10-year period, which is way faster and way higher than inflation. They're also a pretty good company to invest in anyways because their average volume is 4.5 million shares being traded every single day on average, which means it's easy to get in and out of. And they're currently, at the time of making this video, the cheapest bank when it comes to PE ratio out of the big 6 banks in Canada. If you look at their 5-year chart, you can see that, of course, between 2017 and 2020, they didn't exactly go anywhere. And of course, there was recently a pullback, and that would have been an absolutely fantastic time to buy. However, right now they are consolidating. They just recently hit a double bottom, so there could be some nice price action coming up very, very soon. And over the max chart on Yahoo, we can see way back to 1995, where of course before the split, that their stock was about $2 or $3 per share, and now sitting at a lovely $83, which is a massive, massive increase in stock price itself. But we came for the dividends, and what is it like when it comes to their dividends? Well, they pay quarterly, which is totally fine. We can budget ourselves, hopefully, but we can see that they had a 5-cent increase there, as well as a much nicer 7-cent increase there. And of course, when we start scrolling down even further to 2009, it was 30 cents. We can go way back to 2003 where it was pre-split, 16 cents. This is a very solid stock. We can see all the way back to 1995 where it was 5.5 cents per share pre-split. So of course, this is just overall fantastic. Now, the second strategy is to find a high dividend ETF or stock, and it's a bonus if they pay monthly. For example, ZWK is a covered call ETF. Covered call ETFs will generally pay you a higher yield. Now, depending on which account you have it in, they may be taxed slightly different, but I'm not going to get into that here. However, we do see that it has a 7% yield as of right now, and the strategy behind this ETF is, of course, it's a covered call strategy against the US banks, and it's basically designed to provide exposure to US banks while earning call option premiums. Now, I'm not going to get into it huge here, but basically they sell call options against the stocks that they have to bring you extra income. I'm not too sure why the risk rating is high considering other call option or other covered call option ETFs are usually medium. It could be because it's US banks, and US banks are a little bit less regulated than Canadian banks. However, the MER is 0.71%, and it does pay monthly, which is what you're generally looking for if you're looking to live off dividends. They do pay 18 cents per share. Usually, recently, they had a little bit of a dividend or yield pullback. Now, this happens with covered call ETFs occasionally. What that basically usually means, not always, but usually means is they are trying to use a little bit of that dividend that they essentially pay out to buy more shares, or they could be instead just not selling as many call options because they see that there could be an increase in bank stock prices, which means that they would do a little bit less call options. Usually there is a percentage that they try to go by, which means that 90% of the time it's just they want to buy back more shares and they lower the dividend to do so. The top holdings in this ETF are some of the bigger banks in the United States. The biggest, in my own personal opinion, is Bank of America and Wells Fargo, but everyone has a different idea behind which bank is the biggest. Some go by market cap, which I don't blame them. I just go for the fact that I just know these companies the most and I've done the most research on them myself. ZWU is another option. I've never really, I don't think I've ever broken down this ETF on this channel. However, it's something that I personally stay away from myself. I don't like utility companies. However, you can't deny the fact that it has a 7.3% dividend, which is huge. Again, risk rating is low to medium. So see what I mean? Covered call options are still all over the place. Pays monthly and 0.71% MER. Distribution is pretty well set at 8 cents per share every single month. And its top holdings is TransCanada, as well as Pembina, whatever you want to call it, Enbridge, and Rogers. The reason why I'm not investing in it is because I have very little faith in Rogers, TELUS, Bell, and Verizon, and AT&T. Very little faith in those companies. However, I really do like Enbridge. They are currently investing lots of money into renewable energy, and in my opinion, that's the future. So they are massive when it comes to this ETF, in my opinion. Another good option is if a REIT ETF, something like REIT is a good option because it does pay monthly once again. However, what you are looking at here is a higher MER of 0.75, but by basically investing in something like this, it only does pay 4%, but it does pay monthly. And when it comes to monthly dividend ETFs, and trying to live off of dividends, you don't just want to throw all your money into one single ETF or one single strategy. You want to be diverse. So you could go into that utility covered call. You could go into that US bank covered call. You could get a couple of bank stocks. You could get a couple of shares of REIT. There's so many different options out there. But you just want to be diverse. REIT is a REIT, which means that it's obviously going to be in that real estate market. And it's had a pretty good chart. 5 years ago, it was sitting at $15 a share. Now it's sitting at $20. It pays a monthly dividend of 4% currently. It increases its dividend, and we can see it's got a nice slight rise. Obviously, there's, of course, that, but everything had that downturn because of the virus anyways. So overall, try to find ETFs that pay monthly or stocks that pay monthly. REITs, a lot of REITs do pay monthly, and like 99% of them do. So that is a good option. But also try to find stocks that increase their dividend over time, because at that point in time, sure, you may be getting 18 cents a share every single month for the next 10 years, but if life increases or cost of living increases, you would also need to have your dividends increase as well, and that's why I personally just absolutely love the Canadian banks. They're so heavily regulated that they really won't probably ever fail because of their regulations when it comes to the Canadian government. Plus, most of their mortgages are backed by the Canadian government anyways. They really can't, it would be very hard for them to fail. And now with even more of these rules and things when it comes to mortgages, just keeps on adding up to the fact that they're just going to keep on making money, and the fact that they are going to be they killed earnings when it came to the coronavirus pandemic. When people were out of work, they were still making killings because they charge monthly for their monthly subscription service, basically, where they charge monthly when it comes to your bank account. If you don't have enough money in your bank account, you're paying $20 a month. So from there, you have to invest in them if you're a Canadian, it seems like. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button and subscribe, and I'll see you guys again next time.